If you watch my weekly real estate update, you'll know that it's really important. We build new houses. The only solution to the housing crisis, which is contrived, is building more houses. Well, how do you build more houses? Well, at some point, you find dirt, design a house, you get some financing, and then build the house. And one of the people who's involved in the financing side is a friend, Jeff Van Nostran, who is a specialist in, he's a private lender specializing in building, financing, and solutions. Jeff, how you doing?
I'm great. Thanks for having me, Bill.
Now I know better, you're not actually in a property that's in construction, but I guess from time to time you are. So give me a little overview. What does your business look like?
Yeah, I mean, I thought the background would be fitting since we're talking about development and construction, but I represent private lending. I facilitate transactions for builders, developers, real estate investors to secure financing, to do the dirt work, as well as go vertical on property. And as you said, there's a shortage of housing in America. Builders have to help us build our way out of that mess. And there's plenty of demand, regardless of how high rates are right now for home buyers. There's a ton of demand, and we see battles every single day. You see it on the residential side. Your agents see this all the time. There's still multiple offer situations happening, even with mortgage rates north of 7%. So we gotta create new inventory, and new construction can be that solution.
Well, it's the only solution, right? I mean, I think the government seems to want to build more affordable housing, which are just giant things where people live, but people who want to buy things to live in typically want to buy a home. And that's where the conflict is. And you need to get some private financing to make that work, because the government's just not going to support the same way. So for people who want to build, either a spec house or, group of spec homes, what are the options as far as financing? What does that look like?
Well, that's what's so troublesome right now, is that the banks throughout the country, community banks, regional banks, in response to the economic headwinds, what they've seen happen with some of their colleagues like Silicon Valley Bank, Signature Bank, they're retracting. They're going into their turtle shells. They need to protect their assets. They need to protect the viability of the bank moving forward. And so they're getting away from some of the riskier lending. And what falls into that category is development and construction lending. That is some of the riskiest lending they do. And so they want to go to the sidelines. They're hitting the pause button, and it's leaving builders, developers, real estate investors high and dry. And they're struggling to keep their projects going. And regardless of the ebbs and flows in the financial markets, if you're a builder, you need to keep building. That is your livelihood. And it's not only your livelihood, but you are employing tradespeople, the tradespeople that are doing the dirt work, that are pouring the foundations, doing framing. And you see framing here in my background, right? All of the trades labor throughout the country, they need to remain employed, and they rely on those paychecks to put food on the table for their families. And it's easy for the bank officials and the C-level execs to sit around a conference table and say, hey, this is too risky. Let's go hit the sidelines. We're out. Hit the pause button. But the trickle-down effect of what it has on the workers in that construction sector, they don't have that luxury to just go sit on the couch for the next 6 months, 12 months, 18 months and say, oh, well, the construction's paused. The show must go on. And so private lending is a solution to fill the void that is really being created right now by the banks. And it's so funny that in years past, the getting's been so good for so long that you could place your order for financing at your local bank or community bank, regional bank, and you always got a yes. If you were a builder or developer, it was yes, yes, yes. And it was like that for almost a decade. And now today, all of a sudden, it's a wake-up call, because you walk into the bank and you sit down and they tell you no. And it's shocking. But when I say we, I'm collectively talking about the builder developer community. We haven't in these years past been open to alternative financing. We haven't been open enough to establishing these relationships with somebody like myself. And I'm really just here to help. And I'm not an arm twisting salesperson. I am a relationship person to the nth degree. I want to check those know you, like you, trust you boxes before we ever do any business together. I just welcome the conversations to get to know folks and really want to peel back the curtains on the projects that they have coming in the coming years, so that we can work together collaboratively and put together a plan to map out financing for those projects. And we need to keep the machine going regardless of whether the banks are in or out. We have to keep the machine going.
You know, it's funny you say that. I was at a networking event last night, and this guy came up, very sophisticated, comes from some money, and he was telling me, you know, he had I'm more in the fix and flip, the one house at a time kind of rehab remodeler business than what you deal with. But it's the same thing there, where this guy is saying to me, well, nobody's investing in doing fix and flips anymore. I said, nobody? I mean, I've sold, I don't know, 6 houses in the last 2-3 months. They're all fix and flips. Now, are those investors different? Yeah. What's happening now is the part-time people have kind of peeled off, the hobbyists are kind of peeled off, and the guys coming in know what they're doing, and have financing or have capital to deploy on a project to make money on. And then he said to me, well, you know, tell me about your latest deal. I told him what he said to me, what's too thin a margin? I said, yeah, this guy's a remodeler. Like, that's his business. So instead of making 300,000, he makes 200,000. But you know what? He made 200,000. He deployed his staff, his team. He got his vendors, you know, some new lumber orders and some new window orders and all that. And so the next deal, he's still in business. You know, builder's going to build, just like, I guess, is it Taylor Swift, hair's going to hate. Builders are going to build. That's what they do. And the opportunity is to either service them or let somebody else service them. And I think either one's fine.
Right.
So describe for me, what's the most common product that you finance? I mean, every lender I ever talk to says, well, I do everything. I do, you know, from tiny homes to, I'll finance the whole state of Texas in new home building. But the reality is we all have kind of our sweet spot. So how would you describe, like, the last 2 or 3 deals you did? What's in common, or what's the most common type of product that you've been involved with?
I'm really most passionate about building small communities of homes. And that could be anything from, you know, 4 stick-built homes on 4 separate lots. They don't even necessarily have to be adjacent lots, but it could also go down the end of the spectrum to an entire subdivision and everything in between. I really am passionate about serving middle America. And that's where the housing shortage really hits home all throughout the country, is Main Street. Main Street Americans are the ones that need the housing. And I love facilitating transactions and supporting the builders and developers that are building those middle America homes. And I think we saw a lot of builders throughout the country got away from that because there were larger margins and more profit to be made from the McMansions. And so you saw these $1 million+ homes getting built throughout the country while rates were low and it was easy to secure financing. And it's unfortunate because in some ways the builder developer community, by feeding the monster of the mega mansion, created even more of a shortage for middle America.
Right.
And so now it's a really, really prominent problem that needs to get solved. And I think you touched on something that's really fascinating to me. And that is that right now in this market with higher cost of capital, we're not making money hand over fist. This is not the market to make money hand over fist. If you're a builder or developer, you might be dealing with smaller margins. You're under fire because of higher cost of labor. You're under fire because of rising costs of materials. Dirt is expensive. The interest rates that you're paying for the money borrowed is higher than it has been. And so all of these things translate to smaller margins, but builders got to build. And we've got to get out of this housing shortage. So all of us collectively, you play a role in this on the agent side of things. I play a role in this as a lender. The builders and developers play a role in this. This is a team effort, but these are seeds that we are all collectively planting for tomorrow's harvest. We
Right.
may not be making the margins that we would like to make today, and it might be that way for the next 12, 18, 24 months. But we're planting the seeds for tomorrow's harvest because our established relationships with our tradespeople, with our suppliers, where we get our lumber, where we get our windows, where we get our roofing, where we get our siding, all of these people and all of these companies need to remain and survive this onslaught, these economic headwinds of a potential recession. We need to work together, fight through the storm, and when we come out the other end, we're going to reap the rewards.
Well, or maybe there is no other end. Maybe this is the new reality. I think one of the things that I've gone through, imagine if you were an independent, you're not old enough to remember this. There used to be independent video rental stores. You go in and rent VHS tapes. And one day there's Blockbuster that put them out of business, right? There's no more, you can't margin your way out of that kind of competition. And Blockbuster was fat and sassy. Well, we've changed the whole marketplace. We're going to rent VHS tapes forever out of our stores. And one day there's Netflix and boof, Blockbuster's gone, right? And so I think part of it is business always evolves, always gets tougher. And so when people say to me the margins are too thin, I say, well, either you got to find a way to make them thicker, or you need to find a way to survive in those margins, or not play. But I'm going to play either way. I'm in real estate my whole career. I'm not going to give up. I'm not, it's like a football player. You want to see the other teams fast, strong, and big. Well,
Right.
either get fast, strong, and bigger, or don't play football. Those are your two choices. And I think that's the truth with this business as well. I also think I grew up most of my life in around new building environment. My parents moved when I was third or fourth grade into a brand new subdivision. And then when I was first married, I lived in Diamond Bar, where we were surrounded with new subdivisions going up. And my business was doing loans to home buyers of new subdivisions. And there's something healthy about new homes and growth. And there's a new vendor, a new plumbing guy comes in, a new pipe guy comes in, and he's selling pipes, but he's got a new business, and so he's now a new customer to the restaurant and do the tire shop. There's something healthy about that flow that here in LA, now that we have no new home building, it's like a lake with no new water coming in. It's not healthy. And so I'm all in on helping people build and develop. I don't do a lot myself, but I do my best to kind of put those people together. And so, Jeff, I'm glad to introduce you to my platform and want to continue to reach out with you and see it by educating people and help. So if somebody wanted to get a hold of you, I'll put in the show notes your LinkedIn profile that has your information and your picture. I'd say a picture of you, but really the picture of your two daughters, I guess. That's cheating a little bit when they're that cute. It's letting you know it's just not fair at all to put them in your business. But what's the best way to get a hold of you? If somebody's interested in talking about financing for a building project.
Yeah, well, I would welcome a conversation with anybody. Happy to share my personal direct cell phone number is 714-469-4943. Again, 714-469-4943. And also, I think you're going to put in the show notes my LinkedIn profile. I really think that's a great place to collaborate, especially with like-minded business people. Definitely more of a focus on the business side of things. And some people have criticized me for having my daughters in that picture and think that it should just be a headshot. My personal opinion is my family is everything to me, and I treat all of my business partners very similarly. It's all about the people that you surround yourself with, and family is who you become as a business person when you're doing business with me. It's a blend of both family and business. I just think it all goes together. Like, it just says a lot about somebody's character, their morals, their values. And I want everybody to know that family and friends mean a whole lot to me. And if we can check those know you, like you, trust you boxes, I would love to have you in my professional family. And I would love to be welcomed alongside you to map out future projects and help you secure financing. I kind of see myself as it's like a personal CFO. You can outsource your CFO job as a builder or developer by reaching out to someone like me. Sometimes it feels like you're doing a search for a needle in a haystack to try and land financing in an ever-changing world. The ebbs and flows, the volatility, lenders are coming and going from the space. if they lose their funding, they're out of business overnight. It's been happening to private lenders throughout the country. And I just think it's important to have somebody like me on your side to weather the storm. So
I literally had a private money lender call me last night, tell me he's getting out of the business and getting into real estate or some other area of the business. So it's a tough business. This is separates the wheat from the chaff. And the good news is people are left are professional, know what they're doing. I will say it's still not fair. As a father of a cute daughter, that picture is not fair. I'm going to throw the penalty flag on you. 15 yards, illegal use of your cute daughters as a marketing gimmick. They may not be yours. They might be just photos you rented. You went to Disneyland and got you for all I know. So I'm going to just say it's not fair, and we'll leave it at that. Jeff, it's been a pleasure. Great meeting you and continuing a conversation with you, and look forward to work with you going forward.
Appreciate you, Bill. Thanks again for your time, and thanks for having me on your show.